and welcome to the Market Rag for Tuesday, January 15th, 2008. As you can see by the numbers here, you guys, it was an ugly day. Down almost 300 points on the Dow when it was all said and done. Over a 2% drop across the board. Now, there's a lot of economic worries out there, and that's what got everyone jittery, especially with consumer confidence down so much today. That even carried over into most of the commodities. Oil down 2%, gold down 2%, and the bonds still acting pretty strong, being up 1%. As we come over here and take a look at the broad market sentiment grid here, you can see the moves down has dropped us into the lower part of these ranges and just keeping this downtrend going. One kind of interesting thing about today's move is you'll notice the large caps led the way. This has not been the case lately. If you'll remember, about a month ago we talked about how the small caps were leading the way down. That's now shifted, and actually it's turned to the large caps. Don't like to see those big companies go down. Remember that big move up yesterday, and I told you not to read too much into it due to the fact it was that inside day? Well, turns out that it didn't mean much. The big move down, now we're closer to this prior low, and if we keep our downtrend going, we're going to make a new low here. Here's oil still hanging around that old all-time high area. Today's action even gave gold a little break, came down about 2% after this dramatic run up. And the bond still struggling with this prior high back here. We'll see if it can get above it or not. As we look at the sectors, some interesting things have changed here. Some of the worst performing groups out there, like energy, took it hard on the chin today, and it's still in an uptrend, along with the consumer staples being down there pretty good. And the consumer discretionary not looking very good, still in the lower part of that range. We have that same setup in materials here, which was a really nice area there for a while, but we have the lower low, and we're still forming lower highs across the board here. Financials were one of the biggest losers today, but they have been for quite some time. And here's the chart of technology. And if we can start breaking those lows, we could have some good opportunities here to the short side. Consumer staples taking it hard, making a new low and everything. Utilities not going down, but definitely not going up either. And there's your consumer discretionary still dropping down. Coming over to the portfolio, we got taken out of our one long that was on a weekly basis, and now we're just sitting on 3 shorts. Not too much allocated, only about 20% of our buying power, but that's where all our risk is sitting right now. I'll see what I can do about shaving some of that out, but I think we've got the right direction called, so I don't want to get too tight. When you sum it all up, you guys, we're basically flat here on our closing R. Not up and not down. Well, to kind of sum this up, I'm going to drop this market rating to a -2. The main reason I'm going to do that is we have the consumer price index out before the market opens, which is just really a prelude to Thursday numbers where we have housing and job numbers. With the way the market's been receiving this data, I don't think it's going to be to the good side, because I wouldn't expect a surprise in either of those two numbers. So I'm going to drop my market rating to a -2. I'm getting quite a bit on the bearish side. We'll see how these numbers act. The last 2 trades we took were losers, so our portfolios actually dropped down to a 0 rating. Our moving averages are still above each other, but our equity curve has dropped under that first moving average, so we'll start playing a little safer here. You guys enjoy your evening.